What is going on? Hope everybody is having a wonderful day or night, depending on the time that you're tuning in. Today, I got another review and outlook for you. This is not financial advice. This is entertainment and education, strictly my perspective from the things that I've learned in my time viewing these markets. As usual, gonna start off with the economic calendar pulled up, and we'll just briefly walk through that. So this is starting with last week. So there was another surprise Fed announcement having to do with the banking situation. And we saw some volatility to open up last week. Monday, there was no high impact news, but once we get into the charts, we'll kind of see how that played out. Tuesday, we had the Treasury Secretary speak as well as existing home sales. Wednesday was the big thing that everybody was pretty much waiting for was the Fed to make their interest rate decision. And they did exactly what was expected, another 25 basis points or another 25% increase from 4.75 to 5%. And then it's a two-part thing. So I did record this and I put it up a video on whether I don't know if that was later Wednesday or early Thursday. But I do know I made a recording and I put that up about that, just the two-stage process of that and the volatility that brings it to the market. Thursday, we had unemployment claims. Treasury Secretary spoke again that afternoon, and then new home sales. Then on Friday, we had some orange and red folders as well, right? Now this upcoming week, we have nothing today, which is Sunday, nothing Monday, Tuesday, consumer confidence, which was something that saw a lot of volatility into the marketplace last time this report came out, I believe last month. Wednesday, pending home sales. Thursday, GDP and unemployment claims. So possibly a lot of action on Thursday. Treasury Secretary speaking again in the afternoon. And then core PCE price index, as well as Chicago PMI revised U of M consumer sentiment. So a lot of things to do with the overall economy and inflation this week as far as like the reports coming out. So they should see some volatility in the market. But now let's get to the charts. So you see I have the Nasdaq futures chart pulled up. Let me go to the dollar chart first though. Just kind of looking at last week. So there was no bias that I had last week, just considering that Wednesday with the Federal Reserve coming out with the interest rate decision. I knew that that would kind of be a catalyst, if anything, to then provide a high probability bias. But just to skip ahead to that part, this was the dollar's reaction to that release. So once that news came out, the dollar chart saw a significant drop. And we're looking at the 30-minute chart. So we're seeing all the details. I'm going to bump up to the daily chart here soon. But so we opened up with a gap lower last week on a dollar, right? It traded inside of that gap for a little bit, just above it on Monday in the London session, dropped off from there, pretty much consolidated going into the London session on Tuesday, where we dropped again. New York and London closed, we saw a bounce up to inefficiency. From that, started to drift lower, basically consolidating here until the FOMC, right, the federal funds rate was decided. Then we saw a significant drop off. These were a couple daily levels that it traded through, but it didn't make it to that lower one, which I was also anticipating it may reach to. But on Wednesday, right after we dipped lower and retraced into the close, opened with a gap lower on Thursday, we take out that low. And this time in London session, we actually see price begin to recover from the drop a little bit of consolidation, right? One more dip lower in New York, then going into London close. And afternoon, we're drifting higher a little bit. Ultimately, you see just consolidation, right? And then going into London session on Friday, we pick up some momentum to the upside. We actually take out that opening from the Fed funds rate decision. And so it showed weakness again once it hit that inefficiency and basically going into the end of the week, right, we just drift lower inside of this daily zone here. But now going to the daily so you can see those levels. So basically just the midpoint of some more larger daily. So this was a tail. So the midpoint of this tail on this daily candle and then the midpoint of this wick on the daily candle, those were the levels I had marked up. Um, could anywhere within these two down closed candles, though, I would have anticipated some sort of support, but I thought it may be drawn down to here just because it was so heavy. But looking at it from a daily perspective, right, although it traded through this level twice, 2 different days, look at the close, right, or the bodies, and then look at how going into Friday, we got back above the other level as well, close inside of here. And so far, you see we did open inside of it. So we may see dollar show some willingness to trade back up into the January 2017 high, or this inefficiency here with these three candles between this low and this high. We may see it want to trade back up into there. And I want to see how it responds if and when it gets into there, whether it shows some rejection and acts as resistance, or if it can get above into that range, maybe use the low end of it as support and find its way up to that January 2017 high, possibly somewhere within its inefficiency as well. But it's still just Sunday. There's 5 more days in a week before, I really have to make any decisions, and I don't need to make any. That's something I've had to keep in mind, right? That not every day is a good day to trade, as well as not every week is a good week to trade. Sometimes it's better to just collect intel, meaning let price print, candles to give more data to then try to formulate some sort of a narrative bias and trade setups. But now going into the US stock indexes, right? So on NASDAQ, I got the 5 minute up here on the left and the hourly up here on the right. What I'm going to do is I'm going to switch on the left to the hourly. And I'm going to go to the daily on the right, just so we can get that little quick review in, right? And I'll just do NASDAQ this time because most of my focus has shifted to NASDAQ later in the week because it was showing the most strength amongst the 3 US stock indices. And we'll flip through real quick just to show that. For example, now this yellow line is the opening price for last week. So watch as I shift to the S&P, watch at how it is relative to the opening price. So you see same thing on S&P, right? This was opening price. It dipped lower on Monday, just like you saw NASDAQ did, traded higher into some daily levels where I was anticipating it to show some rejection. This was that hour in which the Fed funds rate decision came out. So colored outside the lines a lot, but look at the hourly close on that candle. And then look at this hourly candle go back into that range, the daily zone I was looking for some sort of reaction from, and it happened. So a nice drop off, and that following so the 3 o'clock hour, the next hour after, saw a steep drop off, but that ended up creating a low of the day that next hour, and then going into the close. Well, I mean going into Thursday, we opened up with a small little gap, pretty much traded higher all the way until London, where we saw a retracement. One more pop higher back up to those daily range, right, where I was looking for resistance. One more drop off, taking off that low. And then I don't even need to further explain that because you're seeing right here, clear as day, we traded below the weekly, and then we rejected, came back higher, but then we actually got some closes below it before at the end of the week, we ended up rallying and taking out some buy side to end the week. Now, compare contrast that with NASDAQ, right? Where we on Wednesday we tapped that weekly open price, closed above it, right? Rejected, closed above it. And then for the rest of the week, we never came back down there. And now looking at Dow Jones, pretty much that same thing, open, right? We get that dip, trade above it. On Wednesday, we did not get there on Dow Jones, but on Thursday, we trade below and reject. And then on Friday, we closed below it before ending the week, retracing into our side. And so just looking at NASDAQ here, hourly, and we got the daily, right? So this was the first day last week. So like Sunday, Monday, and you got Tuesday, Wednesday, Thursday, and Friday. So still looking relatively bullish, in my opinion. We rejected and there's a rejection block. So I am very interested to see if it'll have a willingness to finally push through and get above here and quite possibly then trade into the midpoint of this wick possibly, or even take the buy side above it. But that is quite a big range. So it could just consolidate here, right? And even honestly play within Wednesday's candle. If you notice how on Wednesday we have a very large range, right? All the way from the wick to the tail. Every single day since then is inside of that range. So the high and the low of Wednesday should be very sensitive. So those are going to be levels that I'm watching for sure, outside of what I have marked up in the form of this rejection block. All right. And then I'd say lower than that, low, I'll be looking at the midpoint of this tail down here. And so now just drop it to smaller time frames where I got the hourly up over here. Um Also looking at how Monday last week when it was trading down, it traded down into this inefficiency. Look at the bodies of the candle, respect that top half of it before we start to rally. So that's why I'd say if I have any sort of a short-term bias for this week, I will say bullish on the US stock indices. It seems like they have more buy side liquidity to reach for, or more buy side liquidity to engineer possibly before that next, move downward. But that also will have to be in line with the dollar chart, finding some level of support, picking up its volatility to the upside and showing strength consistently. Once I see those things line up, then I'll for sure be looking for the US stock indices to start to turn around and seek sell side liquidity. But like I said, for now, NASDAQ was showing a lot of strength. I'm also liking how if you real quick, right? So this brown box is basically an inefficiency that was created at 1 o'clock on Thursday. And so you see Dow Jones is through it at this point, traded through it off the open this week, came down for what could be a retest here. That's kind of what I'm viewing it as a retest. And that it will continue going higher, but time will tell, right? And then same thing on S&P. We've traded same thing, right? That 1 o'clock candle created this inefficiency. We traded down. We didn't actually touch it, which is actually a good sign to me. If it doesn't have to tap into this and act as support, if it can rally without touching it, I would love to see that. And then just couple that with, NASDAQ, how we've so far traded up to the upper portion of it. We did get above it, but on the hourly chart, look at the bodies of the candles, basically respecting it, back down to the lower end of it. And so what's cool about these inefficiencies, right, is especially the high time frame ones. There's three main levels I'm watching: the high end of it, the low end of it, and the middle. So on a smaller time frames, and now let's just do that part real quick, right? I'll drop down to the 5. So on a smaller time frame, I can use it basically as support and resistance, all of those levels. So up here, you saw how I acted as support short term, right? Once we got above it, but then once we got back inside, it acted as resistance. Then we traded down to the lower end of it. Look at how it's acting as support, right? So that's one of the things I love about these inefficiencies, is that they will tend to give you at least a scalp, if nothing else. But they're always going to show some sort of sensitivity unless price has its mind on another level in particular that is trying to get to quickly. Then you may see something like the low end, the midpoint, or the high end get completely disrespected. For example, here you could argue that it blew right through the midpoint, but the reason for it blew right through the midpoint was because they're trying to get to the lower end of it. You see? So it's just like an example of what I was speaking of. But getting back to the hourly, and I think that we'll be able to finish it up on the hourly. So this week so far, like I said, we opened up here. So we had a gap lower on the open. We closed here and then we opened down here to start this week. I'm also watching the midpoint of this wick, which is crazy because it happened to be within the first 5-minute candle. So that's the same wick that is on that 5-minute candle is the same exact wick on the hourly. So I'm just looking to see, like I said, how price responds. If it's able to trade down to here, short term, I am bullish. As far as upside objectives, just levels we've already traded to last week, right? That makes the most sense to me. So that rejection block, midpoint of this wick up here, which is this level at 13,003.5. And then, like I said, just from the daily chart, right? We'd have these highs of these two candles And then looking further to the left, right, we got the midpoint of this wick and then that high above that. If we want to get a little crazy. So that's pretty much it. Um, got any questions, comments, or concerns, hit me up in the comment section if you feel like you learned something. I appreciate a like and then subscribe. But I'll talk to you guys in the next one. Peace.